Welcome, everybody. This is John Person, and we are living in exciting times. I wanted to welcome everyone, and first, before we begin, if we could just quickly read over the risk disclosure. Trading involves risk of loss. I have a lot in store for tonight, and again, as with any other time that I've given presentations out, there's always meaning for me to share with my, I would have to say, friends and family of followers and those that have participated in the markets, and for those who are coming back to the markets, and for those who are struggling. That's what tonight's presentation is about, preparing for what I think is going to be the most exciting fourth quarter, and after we get through this summer doldrums, which doesn't seem like we've had a lot of summer doldrums, right? But it just started Friday. And so I think between this week, watching how the markets have behaved, and there's a lot of uncertainty surrounding certain sectors of the market, mainly precious metals, interest rates, and of course the 800-pound gorilla. How much higher can the market go in the overall equities, and what's going to be the leading sectors that will take us higher? So with that said, thank you for taking a look at the risk disclosure. One of the things that we did get into, and I just wanted to make everyone follow tonight, is that my career has taken me, and I've met a lot of really nice people. There's just no doubt. I get a lot of wonderful people in my life, and there's a lot of folks in our lives that have come across hardships, whether it's overcoming personal illnesses, loss of family and friends, and yet we all try to do better in this business. And the business at hand is to make money to give ourselves a more comfortable lifestyle. And that's really what it is, right? I mean, I don't think anyone gets involved in trading just to have, well, it is fun, but we get involved in trading to have a better lifestyle. So what is it that we struggle with? We've created several different products through the years. We're going to talk about one of them tonight, and it's a fabulous tool that uses what's called relative strength. And I'm sharing it with you right here. It's on Thinkorswim. So I wanted to just get straight to the chase in tonight's presentation. This is called the PMC indicator. It's a relative strength. It's a graphical tool. For all that attend tonight's presentation, we are going to be sending you a PDF copy on the description of how to use this indicator more efficiently, so that you can, what we look forward to doing eventually is to be able to build it into the Thinkorswim scans, which would be really neat, as an additional filter for our stocks against buy signals. So if we have a PPS buy signal and you want to run a scan, it would be nice to run a PPS buy signal against possibly an additional filter for the PMC indicator, finding out are stocks generating buy signals that are improving and outperforming relative strength. And that would be really a wonderful thing. Inversely, we would also like to see if we could come up with sell signals, like as you can see right up here, a PPS sell signal when the relative strength is weakening. And that's one of the things that I really have found in this equity market, that has been, for an individual stock or an individual ETF, a very powerful tool to use in helping to uncover hidden weaknesses and strengths in the market. You know, before Facebook, and I'm going to change this over to a daily chart, and I know we have other charts in a presentation, but if I may, as you can see, Facebook's rally moving up right before earnings, the relative strength reading was actually weakening, making lower highs, and that's what we call divergence patterns. And I like to stay clear away from stocks that are making divergence patterns. And of course, what's the one catalyst that is going to make a stock move horrendously if it's in a weakening condition? Earnings, right? So here's the thing that I think everyone needs to maybe focus on as we get through the next few weeks. And I think if you think about it, in August, we just went through the FOMC meeting, so we're not going to see interest rates or a threat of interest rate hikes any day soon. The next meeting's in 6 more weeks from the Federal Open Market Committee. We don't have another unemployment report to contend with until September, which is Labor Day weekend, right? And so that leaves earnings season is winding down. What's left, and of course, best of all, the government is on vacation. So we're not going to really hear a lot out of Washington, D.C. as far as the markets or new fiscal policy changes. So typically, we can see some inherent weakness or adverse moves in the market in August because it's generally a very light volume market condition. Children are going back to college. Parents are getting ready to send their kids back to college. And I don't have to give the plethora of listing of what transpires for traders to leave in August. It's the last great month for sitting out at the beach, whether you're in Cape Cod or whether you're in the Hamptons or whether you plan to go to the Bahamas on the weekends. It's the time that people want to at least enjoy the long summer nights and days, right? So that's where I think partly we get into this. But what we want to focus in on, and when I say a few minutes ago that we've developed different tools. PMC is one, PPS indicator, buy and sell signals others, and we have on TradeStation, we had a product called the Person Algo Optimizer, which is basically a program that we can develop to create buy and sell signals. This page right here is my own personal page that everyone that has actually the Person Algo Optimizer actually got this page. This is a 15-minute crude oil, both long and short. This is a 5-minute long only. This is a 5-minute short only. And I don't have a lot of time to get into that tonight, but what it basically does is if we have an idea that the market might be in a stronger uptrend or a stronger downtrend, we would just want to turn on short only signals. So in other words, if we're in a strong trend of the market condition and we want to see if for example, a couple tools that I like to utilize when it comes to commodities, gang, is, and I'll share them with you right now. First and foremost, I still use a little bit of on-balance volume. I have a proprietary momentum indicator, this histogram, and then I have my own variation of a proprietary volume indicator, which is right here, JP volume indicator. And then for commodities, we have a very unique study. It's called open interest. And then again, average true range. And we can kind of get an idea if we're starting to see an expansion in range, an expansion of volume, and if we have very strong buy signals. And that helps to qualify if we're in a period of strong buy signals, why in the heck would anyone want to take short positions? If we're starting to identify the market in a PPS buy mode like we generated here, and I'll share this with you real quick. I'll bring this into speed so we can all, or to focus, excuse me, so we can all take a look at it together. So on approximately June 22nd, we generated this huge, massive up bar, which generated a PPS buy signal. On balance volume had already been trending up. In fact, we generated what we would call a bullish convergence pattern. The person volume indicator here, as we made a secondary lower low, you'll notice the volume was very positive. It was showing that there was a lot of accumulation in here. And so as soon as we started to see this market launch in the direction of volume trending in that trend, we made a very strong recommendation. How strong was it? Extremely strong. I almost reached through the trading room for all our algo optimizers and hit everyone over the head with a baseball bat saying, long only, go long only. And long only buy signals would have been the appropriate way of seeing better performance in a market. In that time period, long only signals, when you're very bullish in the market, if we can go back, here's what you kind of get. When you're in a bullish bias, this is a particular example of when you're looking at taking buy signals. Now the algo optimizer, basically what it does is it helps us to, and I'll share this with you just briefly, basically it tells we can optimize for the best start time and the best end time for the better trades. We can manage our risk to a maximum risk. We can take a maximum profit. We can override that. We can have a scale out ratio of don't scale out of anything, get out of the intended profit target. In this case, we have an optimization where we can optimize what is the best risk-reward ratio, how many contracts. We have a position sizing calculation in here. We can trade up to $100,000 of position value. We can trade as many contracts as individual trade is. It'll put you in, if the risk is $100 and you say I'm only going to risk $1,000 per trade, it'll put you in $100 divided by 1,000 is 10 contracts, or in this case it is stagnant by 2 contracts. We can confirm whether we want to take buy signals, whether we want them with or take high closed dojis, and you can clearly see that this is a long only. Why? Because the cells are defaulted at 0. This is true false. 0 is false, 1 is true. So max bars, it holds the position on a 5-minute up to 32 bars. If that's the extended holding period, then it would also override and get out. A lot of different factors are covered in this particular optimization program and product. So basically what it is set for is to get out if the entry is our orange line, red is our risk, and blue would be your profit target, would get out of half of the position. And what does it do? It either trails it on a trailing stop basis, and that red line, it just went and moved it up, says get out. And so that would be the trade that would have been taken, or was taken actually, in that situation. So we can define better trades, and using an algo optimizer, this is another illustration of how we can quantify trades and make money in the market. So it's always the old adage is when you're bullish, you get a little bit more fruit off the tree by going on the long side. Now, with that said, if we take a look at the current stock market, a couple of things that unique tools. One I just shared with you is open interest for commodities, right? The other unique tool that we would want to use if trading stock indices is the breadth of the market, the advanced decline. Now, is this a rip-roaring bull market at this exact moment today with today's market action? A lot of you are here today. That would be, if you wanted that question, I would say, well, the funny thing is we had a enormous upside move in the advanced decline in the S&Ps. The advanced decline in the NASDAQ 100 just breached its little high up here, so it's supporting the new high rally in the Qs. The Dow Jones Industrial Average just broke out to a newer advanced decline cumulative reading. The New York Stock Exchange Composite Index today broke out to a new cumulative high reading, but not the NASDAQ Composite. The NASDAQ Composite looks a little divergent right now because it is pressing and closing in on its all-time price highs, and as you can clearly see, the breadth of the market is lower. So we'll give this a couple more days to see exactly if we are getting a complete run-up in all sectors of the technology space. But here's one that's very, very interesting. Remember about a month ago, everyone was talking about domestic-led growth stocks, meaning the Russell. The funny thing is the Russell is now trailing behind the rest of the markets. In fact, we did not get a breakup in its breadth of the market. So I'm not sure if the rest of the market segments are going to take the Russell up, or if the right now, question mark, if the weakness in the Russell is a warning shot moving forward. We also had a market that seemed to be moving up on some pretty benign volume, and that's indicative of summer market. So again, I don't see any cracks in the eggs, so to speak, of a dynamic bull market yet, with the exception of the Russell, and we want to watch to see how this kind of ends up by the end of the week. That would be first and foremost. So here's the thing. We've got all these tools. We even have automated trading systems to help us out. So what's the problem with people? I have today, and a lot of my clients had said to me that they have a confidence issue, and they have, been maybe they're sitting on the sidelines. And I got news for you. In the month of August, in the next couple weeks, these will be some of the more challenging times to trade because there's you'll be a market maker almost, right? Apart from earnings, look what happened today with Tesla. Elon Musk on a given day, in fact, what we had prognosticated well over a week ago, gang, was that if, in fact, we got a move in Tesla, TSLA is the symbol, and we got to move up in Tesla up into this zone, this was what we were looking for a run-up into this zone against its highs. We even had a person's pivot resistance target. We were looking to put on some credit call spreads up in here. Now, I wasn't looking for Elon Musk to send the most financially bizarre text storm in history of my recollection, but if you can see a couple little indicators here, we're definitely telling us not to be short yet, but to look for maybe some upside. Every time the market comes up, it falls down. And more importantly, look at the volume indicator tool and the person market catcher tool, the relative strength. Even with the last 2 weeks and the current week's rally up at these highs, the relative strength versus the performance of this stock versus the S&P is weakening. It's weakened. It's not outperforming. It's just starting to perk its little head up there with that little bright blue bar. But nowhere is it in an improving condition and over time outperforming the market like it did in this little run up in the market here. We had a nice upside in volume. We had a great indicator based on the person volume and a PPS buy signal over here. This was back at the end of 2016, and it was just set up perfectly for a buy. Right now, this is showing actual internal weakness. So because it is such a high-profile situation, does Elon Musk have the funding to take this private for $4.20 a share because that's the news? Well, at this point in time, it would be something that we would want to be focusing in on the moves tomorrow, because today there's a little bit of skewed volume action here because the market was halted, right? We were halted trading. So, you know, the next area, we had a little resistance here around 373. What I would be looking for, and I don't know if we'll get it, but next stop, 398. What I would like to see anytime that I'm looking for a market that may have a big run-up, with the exception of big news like this, if it's a big run-up and it starts to wind down, I want to put in on against older highs, against maybe a weakening relative strength, against a declining volume, a credit call spread. Makes sense. And so next thing is, do you have to say, well, I'm not bearish the market, but I think the market's going to pause or stall. And so I think there's a lot of different indicators out there that we can utilize. If we can just teach people how to use these a little bit better, I think my job in helping my fellow traders get the most out of what they seek will be completed, because my career path, by the way, is now transitioning into what I've been looking to do for years, and that is in managed money. So I am actually in that entrance pathway of leaving the educational field, leaving behind the and being more private trader in equities, and that's where my path has led me, and that's a wonderful, wonderful thing for me. What does that mean for my clients? Well, I haven't put on a special project teaching. We do seminars once a year. We had our seminar at sea events, which are always nice to get together, but I haven't done something, and I've heard a big demand, which is, to me, I really want to make sure everyone gets this. I've been hearing a lot of people tell me they just don't have the confidence, that they're lacking the confidence. And I'm sitting here going, you know, I wrote all about certain things in my very first book, and a couple things that we talked about as far as confidence. What is it that traders feel they can't succeed? Because we have all the indicators, and I just shared with you a little taste of what the Person Algo Optimizer is. I just shared with you how to look at maybe reading volume analysis and looking at relative strength. And I could throw the kitchen sink in indicators out there. But what's one trader got that another trader doesn't? And why does one trader not succeed while others succeed fluidly? What is it? And I think that's what I wanted to disclose, was a couple trading components that all traders can immediately apply in their trading methods. And so the presentation tonight, I wanted to just get into the details on which indicators are more reliable for short-term trading, as well as specific parameter settings that should be used. I talked already about a little bit of the PMC indicator. We talked about open interest for commodities, and we talked about advanced decline for individual stock indices. And I also want to go through some of the top 10 principles that I think traders need to understand in order to build a more effective trading method, and key component, mindset. Because that's the difference between what makes a trader succeed and not. It's the mindset. It's the frozen aspect of, man, I see the signals, but I don't want to turn it on. The risk is too much. And I hear a lot of my own clients, they love the algo optimizer, but they're not using it as efficiently. They turn it off. Oh, I got out of the trade and it just kept going. Well, if you're in a trade, the best way that I've ever discovered how to stick with the winner is get out of half, especially for a day trade market. Another tool I already talked about is average true range. We use that an awful lot. You know, if a market is in an ATR, an average true range, especially a product like crude oil or the S&Ps, and you have a really solid buy signal, and the normal daily range is maybe $1.50 in crude oil or $2, and the move's only beginning and it's got a 90-cent range, it should give you the insight that if it fulfills its destiny of an ATR, the market may expand. So apart from good risk management and being properly positioned in a trade, achieving wealth from trading in the markets comes from understanding the psychological impact trading has on one's own psyche. That's a very powerful statement, gang, because no matter what we try to do for people, whether it's trading gold, whether it's trading crude oil, whatever it's trading, and you can see here's a long and short model for gold. I mean, if you just don't want to sell the low of the day and you turn the machine off and then you finally think the thing's going to go down, or you don't want to take buy signals, you know, you can only take so much money out of the market that the market is willing to give us, right? Now, here's an interesting aspect. If you're not familiar what this is, a blue line shows exactly the short position. It shows where it gets out, shows the entry. So blue lines are winning trades, red lines are losing trades, and losing trades are going to happen. This is an equity curve. Now, this is another aspect that I wanted to share with you. Notice that the market trend is a little choppy. I mean, it rallies, it pulls back, it goes up and down, and you'll notice there's no trades in this time frame here. Well, the funny thing is, if we strategy and we go up to format, you'll notice that it doesn't take trades during that time frame. It actually starts trading at 3 in the morning. That's 2 a.m. plus 1 hour. It trades from 3 in the morning to approximately 3:30 in the afternoon. So that's when it defines its trading setups. And that's one of the things that I think a lot of traders need to understand on your psyche. What is your risk? You need to understand the predictability in the market. It's not a science, it's an art. Meaning we can't get every single trade right. You're going to get knocked, but if you have a back-tested performance, if you understand certain techniques and you can work through this, then your confidence, you need to do it in order to achieve that wall of fear. And that's what I really wanted to get through, and I think the focus is summer school. You know, this time period in the markets may be our job as traders to keep one eye on the market, our eye on our equity, but also understand when is a better time to be in the market and when is the time not to be in the market. There's that old adage, when to be in cash and when not to be in cash. Or maybe when's there a time to be in equities, a time to be in gold, or a time to be in crude oil, or a time to be in maybe any strategy that some people just love to be in options only, in iron condors, or they like to take in theta, whatever that strategy is. I But you shouldn't have to be in the market every single minute of every single day. And I think right now, what I want to focus in on for all of you is one thing. Let's take what could be, if the government's on vacation, if hedge fund traders are on vacation, why the heck aren't you, if not on a vacation, then ramping up for what might be one of the most powerful fourth quarters that we've got coming down the pike, with such a strong equity market, such a weak gold market, such an event that the Federal Reserve could be unwinding quantitative easing globally. Bank of England just raised rates. You know, we had the last president flew over to Britain. I don't know if anyone remembers this. President Obama flew over to Britain, begged the citizens of the United Kingdom to not vote out against leaving the European Union. Said it would be a disaster. You know, not so much of a disaster. In fact, the economy's growing. They raised interest rates. Global central bankers are starting to eliminate quantitative easing. Folks, this is exciting times. So what we need to do is to not study what indicators are working, or maybe study what indicators are working better in this environment, and focus in on those, learn those indicators, but also work on ourselves. And that's what we need to do in summer school. Work on ourselves. Take this time to maybe work on ourselves. And I think we need to apply sound technical analysis, as well to just not only help you time entries and exits, risk and profit objectives. You know, here's, again, let me share this with you. A entry, a profit target, a risk, everything loaded up, and I still have traders that say, I'm scared to take that trade. How are you afraid of taking that trade if you know that you're shorting a market at this level at around 12.18, and if your stop loss would go at this red line right up here, which, I mean, we're not talking a lot of risk, $200 a contract, and your profit target might be all the way back down, as you can see the blue line, or lower, keep in mind, at 12.16. Now that's about a 1-to-1 or a little bit more risk-reward ratio, and then trail the stop on the balance. Because if the market fell out of bed, you'd be able to participate it. You know, this is the kind of the thing that many traders are struggling with right now. Greatest system in the world, and they struggle to turn the machine on because they're not sure. And we have to work on that with a lot of traders. Now, this is just an example of crude oil. We've, excuse me, we have a product, and I've been trading this, for a couple years now. I introduced this at the May Money Show back in 2016. That's a long time. So that'll be going on 3 years this coming next May. So over 2.5 years. This is the volatility index of VXX. You'll see these are the same product, same time frames. There are 4 different models though. All right. And this is part of what J. Person Asset Management is staple product is focusing on. Now here's the key. I just gave out the secret of what I'm trading a fund on. And here's a product that what we, which I'm not going to disclose which one we use, but it's a combination. You'll notice that most of them, and I don't know if everyone knows what they're looking at here, the green is a closed equity curve. The fuchsia means that this particular model would still be short a position in the VXX. The VXX is the volatility exchange traded note. When the volatility VXX goes down, it infers that the stock market, or at least the S&Ps, not necessarily the Russell or the NASDAQ, this relates to the VIX futures, which are based off the VIX. The VIX is based off the option valuations on the SPY, or the S&P 500. Now, it's a little complicated, but I think you get the point. If the S&Ps go up, this thing goes down, and you'd want to be short. Now, if you have a 401k and you can't sell short, this is a great indicator that says if this thing's going down and the system's short, by gosh, I better not be short the spiders. Maybe I still want to be long spiders. How's that sound? That's a pretty logical thought process of putting things together. This goes back, I'll share with you a couple little things here. First and foremost, This is an equity curve. This is phenomenal. I don't think there's anyone sitting here watching this who would say, I want that in my portfolio. Looking at periodic returns on an annualized basis every year. If you started with 100 grand, in 2010 you made 83,000. In 2011, starting value of 100,000, you made 182,000. In 12, 152,000. We're talking on $100,000, 130,000, 80,000, 180, 40, 46, 85,000 year to date. Yes, there's ups and downs, but that is a phenomenal track record for a product that takes positions in the market. There's different models. You'll see this is 988,000. This is 766,000. Everyone has, and if you'll notice here, let's take a look at the performance graph. This one's a lot smoother at the cost of less profits. This one that I just clicked on, it's coming up, is a lot smoother with a couple little periods of not drawdown, but sideways price action. And then here's another variation that's just under different conditions. And they all have, from left to right, a upper green mark. I mean, something I think that everyone, and they all start, by the way, at the beginning of 2010. So whichever model you're looking at, whether it's one that's more smooth, one that takes less drawdowns, etc., you can utilize these signals and apply it to your trading in the market. Now, what has that got to do with anything? A lot, because you can use these algorithm models to trade other or like markets. If this thing's going down, or if it's gotten out of a profit target, like this model did, it may give me the idea that should we scale out of our cash position or get out of everything? And in this case, I will let you know we are flat in real money, flat the position. Good, bad, or indifferent, it was a judgment call based on the fact that we had a profit target reached in one of the models. So there are certain things that we use, not one model, but you'll notice there's 4 models. They all kind of make money. They all have almost the same entry. Some don't. Some, like, for example, this one had an entry up here. This one had an entry over there. This one had an entry down there. They all have maybe just around the same entry techniques. But they're catching, and the more that generates sell signals all at the same time or thereabouts, the higher or the stronger the signal. The stronger the signal, the inverse, the stronger the signal would be for the S&P 500. All right. So I just wanted to share with you a way that we can maybe improve your confidence level in the market. You know, it's kind of funny, but I gave a presentation at the Chicago Board of Trade in 2005 to professional traders with this exact screenshot. I haven't used this in literally over a decade. I found it while cleaning up some files in an old Eurex US dipstick, as we called them back in the day. Eurex US, I gave presentations for them, and I couldn't believe I came up with it. I thought this would be awesome because, gang, we can throw the kitchen sink at making the greatest indicators and signals. But people seem to be struggling with taking those signals. So what is happening here? And that's what we want to get down to the bottom. What can we do? You know, there's a lot of great reference books that you can do, self-help books. There's a lot of things. But there's some great things that we can do that can improve your results and how you trade in the market almost immediately. You know, if you think about it, here's one that I think most traders struggle with. They take quick to take a small profit and they let the losers run. Versus professional traders, we follow a long-term plan based on extensively tested research, which I just shared with you. Isn't that a big difference? Limit losses while on losing positions, letting profits run on profitable positions. That's a patient approach. Look at this. On equity, often diversifies into trading positions, covering maybe 25 markets while committing maybe 10 or 40% of the account's equity to the market. So on $100,000, would you want to be all in every single time of your trades? Probably not. And I think a lot of people like to swing for the fences, go all in, and they have these big wins every once in a while, and they don't show all the little bigger losses that accumulate through the years. I think that type of trading will destroy any human being's confidence level by trying to swing for the fence every single time. And that's where you're going to get into this, getting out of the profits too quick, because it's like, oh, it's a profit, I don't want to turn a loser. You know, we have to retrain that mindset. A lot of people believe it's their destiny to predict the direction of the markets rather than manage their risk. You know, if you manage the risk, if you understand the market, if you understand there is certain patterns of the market, first hour high, first hour low of the day, things like that nature, if you could just manage to only wait and commit to 1 hour at a time per trade. Imagine that. You're in a trade and you say, you know what, I'm not going to make, if I don't get stopped out, I'm not going to take the profit, I'm going to wait for the conditions for the first hour of trading. That's a huge step forward, that one little commitment, that one single commitment. That's what's powerful. We have so many popular technical tools, I can't even list them here. You know, what's really neat is I went through Thinkorswim, and I know you guys, most of you are Thinkorswim users. And if you go over here to studies, I did this the other day, and I got, I don't know, ADD or something. But if I go over here to add a study, and I went over here to all studies. So I'm going to go to add a study, and I'm going to go to all studies. I don't know how many studies there really are. I got bored after looking through M&O. And so for me, I think when you look at all of the studies over here, look at this. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and I'm only on Arun oscillator. I mean, it goes under A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, and then there's more beyond that. And this is the ones that people want to do in the blend, and I think there's probably over 400 studies, because I got lost at, I think, M, and there were over 200 and change. And I said, this is not even worth my time counting. I didn't realize they had that many. There's the alligator. There's something there for somebody. You know, there's more indicators than there's the 4 things that we need to focus in on the market: open, high, low, close, and then the 5th is over time. Now, I already alluded to the participation rate, which is volume, but for stocks, relative strength to the overall market is one of the most important elements that it seems to be focused in managed institution money repertoire right now. So the PMC is probably one of the most advanced tools that you will use for our current time frame, now more than ever, since we have more indexing funds and indexing trading going on. So whether it's looking at, for example, the XLK, looking at the Technology Select Spider ETF, you can clearly see versus the S&P, it's starting to lose its strength against the overall market. It's hitting a plateau, and that would be a cause of concern. Even looking at volume, on balance volumes not breaking out, we have older and newer highs in the XLK. Now here's a situation that we need to be aware of. They're going to be restructuring what's in this ETF. If you took Google out, if you took Amazon out, oh my goodness, right? If you restructure, and they're doing that, by the way, we're going to have to understand all of that. So by looking at it, just not knowing what's about to happen, you need to be better educated. I think that's the challenge. So what I like to say for everyone, is first and foremost, if you have not traded in a while, you need to relearn about all the new functions of A, not just your trading platform, but B, any new developments that are coming down the pike in any select ETF, because they are being restructured. And and new ones are being created. It's amazing how many different ETFs are out there. And then what you need, another thing is, if your brokerage firm, because everyone's out, and I know they may not like me to say this, but brokerage firms are vying for your business. You know why? Because interest rates are going up. And when the Fed raises rates, they make money on the float. Every quarter point rate hike, one particular brokerage firm makes $250 million on float. Can you imagine what that does for your marketing campaign to make $250 million extra on the float by just one simple quarter point rate hike? That's one brokerage firm. That's amazing. So here's the thing. They're all vying to get your money into their door. Maybe they can offer you cheaper rates. So first and foremost, if there are cheaper rates and you have a current account, ask them for cheaper rates. Say, hey, do you think you can extend me a cheaper or featured? You know, we have a situation with TradeStation. When you buy a product from me, they give you a rebate, unless you didn't ask for it, of up to 20% of your commissions. You trade, and that's for life. It's not for this year. It's for life. I have clients that have been with me since I started teaching in 2004. That if you think about all that time, over 14 years, they would have gotten all their money back and more on a 20% rebate on commissions. That's fabulous. I think trading requires discipline. And I think before you start trading, if you've stepped out of the market, maybe you're not familiar with new functions on your platform. Perhaps you need to practice entering orders or use a simulated account just so you get the handle of understanding what it's like to place orders in the market. If you're going to turn on a function and you go to format strategies and you're going to start to trade, generate trade strategies, auto execute, you just hit agree, and this thing is going to fire. And this is not a sim account. This is a real account. Right now I'm not trading in the night session when we get done here, but this will allow you to just immediately have trades with confirmation on or with confirmation off, meaning a box will say, hey, this alert, this trade just set up. Do you want to enter the order? You hit yes, it fires everything off for you. It's just a quick glance of confirmation. Or I'm sitting in front of my screen, I want to be taking short only or long only, and I want that particular model open. Again, I'm just giving you a plan of attack of how to better utilize the market information and your trading platform. Prepare your mind, your body, and soul to succeed. Trading is stressful. I don't care who you are. Looking at the market, unless you're Superman, it can be stressful. It's a result-driven business. Nobody's getting blue ribbons for bad trading outcomes. That's a fact, and I wrote that. But is your mindset focused on success? Or are you just trying to maybe wing it? What do I mean by that? Is your mind really focused on succeeding? If you hesitate before you put on a trade, if you know your dynamics of your trading system has great track record performance, why are you saying no on the trading? Right? So what's halting people from succeeding? The only thing that's halting people from succeeding is people themselves. That's it. So don't come to the trading desk, don't come to your computer with doubt that you're not going to make money. If you think you can't make money, you're going to probably be right. You have to be able to think that this is going to work, and maybe not this trade, but learn from it, right? So I used to create, and we wrote about this in a first book 15 years ago called Affirmations, and we used to give these affirmation information. What is an affirmation? An affirmation is a chant, or it is a phrase that you say to yourself, and generally you want to write it down, and you're telling yourself about a positive concept so that your subconscious mind starts to take over your conscious mind. We are human beings. We are creatures of habit. Most of the habits that we have as human beings are bad habits. We eat too much ice cream, too much chocolate. Maybe we indulge in an extra glass of wine or two. We have bad habits, and fear can overcome a trader. So this August, this is summer school. Focus on your mind, your body, and soul to succeed. Take advantage of these next few weeks that might be light, illiquid, not much is going on. Instead of trying to force trades, focus on yourself and know that when we come back in September after Labor Day, party on, baby. You got September, October, November, and half of December, and that's going to make your year. But by burning yourself out this time and not doing something positive, that's where you can change your life right now. Now, I'm not giving a Tony Robbins speech. I'm giving what I tell my own trading community and what we're preparing for. I think the first thing is you're going to get this PMC indicator PDF. You're going to learn about that. And that's going to be a fabulous way to understand whether you should be in a stock, you should avoid the stock, or maybe heighten your awareness that the stock could be under or outperforming the overall market. So that's what we're talking here about, the comparative relative strength. And then volume studies. And then, of course, my favorite, pivot points. Here's a great classic example of looking. Now, this might be a little too expensive for most people, but if you notice back in June, how many weeks ago, right? 7 weeks ago, we got a little PPS buy signal on an uptick on unbalanced volume, and the PPS indicator. Look at this pattern. I want you to stare at it. Did this market make a newer low in May than the preceding low in February? Look at that. Absolutely. Why is the relative strength bars higher? You have higher. It was showing that the bearishness was starting to dissolve. There was accumulation in the positioning here, and now it's up and it's rallied. So at this point in time, what we would be looking for, anytime you're looking for a market to start to outperform, we want to see a PPS buy signal, uptick in volume, and improvement in relative strength. I had this chart up for you already. It was Toll Brothers. Many of you already know about the low close doji. Wow, look at that. Doji high, low close doji, PPS sell signal. When that market was making a newer high, and you can clearly see at the beginning of the year, Toll Brothers was breaking out. The volume made a lower high, and the PMC indicator was deteriorating. And that, my friends, and it couldn't even take out an older high. So the market rallied, and it had weaker relative strength than prior rallies. It had deteriorating volume, and it was in a sell signal. Not the stock you want to buy the dip on. And Toll Brother has done nothing every single week but go down. This is not an old chart. This is as of like this afternoon. So again, the market, until we start to see the relative strength improve and volume, I'm not sure when we're going to get back into buying some of these home builders, but it's definitely a stock to avoid. So maybe you didn't go short the stock, not a big deal, but you knew not to get long in that space. Steve Wynn, you know, greatest entrepreneur in the casino gaming industry in history, but yet something, as his stock was rallying and making new highs, the relative strength was weakening. Hard to see, but if I can train your eyes to see it, you can clearly see new highs, but not in the relative strength. It was weakening and a sell signal, and all it did was continue down. Now this is Twitter. Now Twitter is an interesting study because we loved it over here. And back in February, I was telling everyone to buy it, and right when the market crashed, I thought we would buy it and it would go down. The funny thing is, the stock market crashed in February 6th, but Twitter actually didn't go down. It went a little down, and then it went straight up. The relative strength was improving on Twitter. And all of a sudden, you got that buy signal, and the relative strength was outperforming. And all of a sudden, up here, one of our students in our live trading room said, John, what do you think about Twitter? I said, Twitter, before earnings, it's got a very bad relative strength reading. It's probably got a good trade back down around, I'd look at it around 32 or so. I mean, and that was the exact comment. Dave P., my brother from a different mother, Dave P. And where did I come up with that idea? Well, I was just looking at the market to come back to where it once originated from, right around in here, but the relative strength was weakening as the stock was getting ready to report earnings. That's an ugly trade. So the relative strength, the PMC indicator, is powerful. This is AMD. Look at this base that the price action's putting in. A little bit choppy, but boy, by the time it generates that breakout bar look at the strength of the relative strength outperforming the market. And that's what you want to see for a stock that might have more emphasis or money chasing it. It's going to outperform the other benchmark market. And that's the power behind utilizing the PMC indicator. Now, there's key elements for a successful trading method. You obviously need consistent initial entries into each market. And I showed you a model on the VXX. I don't mean to go jumping all over the board, but if we're looking at consistent entries, what are you using? High closed dojis, PPS, breakdown, wedges, compressions, Bollinger Bands, squeezes, doesn't matter. Whatever your methodology, make sure they're consistent. You want to definitely have some type of initial risk control in each trading position. And that's one of the things, at least with the Person Algo Optimizer, whether it's crude, whether it's gold, E-mini S&Ps, whether it's Apple, whatever it is, there's initial targets, there's initial performances, and here's a buy signal in Apple, and look what it did. It carried it all the way through. So this is the equity curve on Apple on a small position using a swing trade methodology on Apple. Really nice to know that it was a PPS arrow that generated a buy before earnings. Wouldn't you say? Not bad. What is the point I'm trying to make? Everything that we're teaching, everything I've ever taught is right here, and it was put together. So you have effective entries. You have logical entries that you can build on an initial position. You have risk control. You have exit strategies for all positions, whether it's profit, holding period, risk-reward ratios, trailing stop methods. And yet, people are afraid to trade. And when they finally get to trade, they maybe fail. You know, I want everybody to understand, out of everything I shared with you tonight, think of it this way, guys, ladies and gentlemen. Thinkorswim, 400 indicators, and it's all based on what? The high, the low, the open, the close. We all have equal access to those four little things, and it's that over time. That's it. That's what we have to deal with. Our trading techniques, obviously direction. We have to have some kind of ideas, so we use maybe what, a moving average or a trend line? A condition. Maybe that's fundamental leadership, like Elon Musk's tweet today. Boy, you know, you had, I can't stop laughing because, you know, you had Alan Greenspan's going down with irrational exuberance as the most famous phrase ever in financial history. Elon Musk has got, what, funding secured. Like, everyone's going to be waiting for this over the next couple of days. Funding secured. That's like, funding secured. Are you sure about that? Funding secured. And so we just got the phrases of the lifetime was just born, right? So you'll be hearing more about that. Fundamental leadership. I'm not sure if today's tweet was a fundamental leadership, but it sure got the market to move, right? Anyway, technical analysis using candles is important. Examination of the color of the candles and the relationship of closes to highs and lows. And again, what I wanted to point out to you is real simple. When you look at, like, for example, our advanced decline analysis, and I look at a market that gaps up like the NYSE, it is making a breakout with its advanced decline analysis, but it's not breaking out as it should, number one. And number two, it broke out and it couldn't close above its highs. So I don't know if this is going to be just maybe a gap and fill and then we resume the trend, but we'll definitely be watching to see if the advanced decline kind of deteriorates in time. Because the way the market gapped higher and came all the way back down, closing below its open, and that's just an example of what I'm referencing here, understanding. That's what we call a shooting star, no doubt about it, or an inverted hammer. The market gapped higher and came all the way off the highs. There were people willing to sell. Now, one candle does not make the high, especially with increased advanced decline. But if it can't follow through in the next day or two and the breadth starts to weaken, that's going to be a cause for concern. I just want you to understand what I am talking about in this bullet point of condition. What is the relationship of the close to the highs or lows? And the health. We talked about volume. Look what open interest means. And we reflected on commodities. And breadth analysis, as we've just explained. So trading techniques, we look at direction, condition, and the health of the market for whatever we're trading. I want you to understand, winning traders consistently will follow a tried and tested plan knowing that there's going to be a bad day. And that's all right. Learn from it. Write it down. Are you responsible for your trading? Are you logging it down? Are you sharing it with someone? Do you have a trading partner? Someone that you can bounce your results off with. I took some trades today. I took them here. I look what I did. Here are my results. Boy, it didn't work out well because I didn't take the signal exactly. I kind of cheated. And then you sitting there like pouring your guts to somebody else and being responsible. And that way maybe you'll overcome the obstacles. Having a trading partner. Maybe not someone that's going to be there and give you half the account money, but someone that you can sound off. And I don't care who it is. Next door neighbor, your wife, it could be a friend, and say, I need to go through this. Or maybe go to a local counselor and say, I need to set this up once a week, and I want to make responsibility. Or maybe it's someone in a trading room. You know, something that I want to instill in our room before I depart. Saying, hey guys, team up. Go through and be accountable for your trading. Now that is positive action. That's doing something positive to change. And that's what summer school is about. I think losing traders, they just say, should I get out? I don't know. I'll think about it. And that's when blow-ups occur. The key elements for a successful trading mindset, you need to be physically kind of fit. Physically meaning don't be sick. Don't be trading under medication. It doesn't work. I got hit by a car. I had shoulder surgeries. I couldn't trade. I didn't want to trade. Missed all kinds of opportunities. Why? Because I didn't want to point and click the mouse and stare under pain medication. Believe me, plus having shoulder surgery, you don't want to really move your hand that much to begin with. So if you're not physically fit, don't trade. But you need to be mentally prepared and psychologically fit. And that's what requires to give you an advantage in trading. Fear, that leads to hesitation, and we have to overcome that element. We talked about positive affirmations. First and foremost, there's a mantra from my first book. It's on page 200. I am a positive, fearless, and successful trader. We had a mentoring session here in my office about 2.5, 3 weeks ago. And I whipped this out because people were telling me, John, I got the algo system. It's doing great. I see the numbers, but I hesitate. And I said, here's your homework assignment. You write this down 10 times. And you're going to write out that if the trade does not work out, then I'm going to learn from that experience so that you're not locked with disappointment, that you're going to learn from that experience. Visualization techniques. I'm taking the trades. I'm running the numbers. I'm doing the trades. Visualize a positive trade setup that you took. Try this exercise. After you're in a trade, ask, how do I feel? I feel exhilarated. I feel rewarded. I did the right thing. If you think I'm scared, then ask again, why are you scared? What is it that makes you scared about turning the machine on or taking the trade? And then ask yourself, what can you do to feel better? How? What can I do to feel better? I just have this overhanging issue about losing because the last trade, the last trade. How does the last trade have anything to do with the next trade? Right? If you had a defined risk and a strategy that says get out when you're supposed to get out, who cares? You did the right thing. And those are key elements for a successful mindset. If you are accountable for your trades, then to whom are you accountable? And I already covered this. If no one, get someone. Talk through the results. Why did you take the trade? Or why did you hesitate? Or why didn't you take the trade at all? Look at everything positive about a trade, whether it's a winner or a loser. It had a trade, it had a great signal, it failed, it stopped me out, but boy, am I glad it got stopped out, because if I had doubled up or if I kept buying all the way down, I would have been wiped out. So I did the right thing. I took a trade, it lost, the trade was manageable. That's the best possible outcome. Key elements for identifying higher probability trades. You know, we talk about this as far as stock traders. I think that one of the things, and I'm going to sum this page up real quick, is I like to take at this bottom page here, scans. I'm going to go right over here real quick, gang. I'm going to show this scan here. I go over this scan. And you look at scan number 2. It's a buy signal, a daily buy signal, when the weekly is in buy mode. So what does that really mean? Well, what it means is that maybe perhaps we had a big old run-up in the market. So I'm going to take a look at whatever this is. This is Harley Davidson. Let's try Fastenal, PACCAR, what else? Healthcare, Macy's. I was talking about Macy's today. Macy's has kind of a decreasing overall relative strength blue bars, but it has a weekly buy signal. It pulled back 1, 2, 3, 4, 5, 6 days and has a daily buy signal. So it had a big run up, a 6-day pullback, and if the market is going to extend the run, then perhaps we have follow through going on in Macy's. The relative strength's improving a little bit and the volume's upticking a tad. So maybe perhaps Macy's. That's what I'm referring to by setting up specific trades. So how do you get a checklist of what your business plan is? We want to work on your mindset and we want to work on your trading plan. I only want to take continuation patterns to the upside that are in my checklist. I want to try stocks that are in a higher degree buy signal that pulled back a couple days and they're generating new fresh buy signals and are going with the dominant trend. That's what this page means. Now, running your plan of attack. Did you run back tests? Do you know what the trilogy is? A last conditional change, PPS, high close, low close, divergences or bullish convergences. Where's your hard stop? What other confirming indicators are you using? These are the things that you should be doing for your personal trading plan. If it's already in an algo optimizer, such as this, for example, I always go back because right now I'm looking at just the overall gold market. But if you have a market that you are, and we're going to go over here and format this. Look at this. I'm going to take buy signals. I'm going to take sell signals. Those are PPS buy and sells. I'm going to take high closed dojis. I'm going to take low closed dojis. I'm going to go and enter at the market when I get those. I'm going to have a risk. I'm going to scale out 50%. I'm going to trail a stop function. I'm going to get out under the current market with, if I have a maximum loss of 450, I don't care what you say, punch me out of that trade. And right now, because of where gold is, if I got an $820 profit, get me out too. Why are those two functions set like that? And I'll explain right now real quick. How can I take $20 in gold when it has a $10 ATR? That's a pretty hard thing to do. So maybe one day when the average true range expands, maybe I could take more money off the table. But I can't take a day trade system of $1,500 when the average true range in gold is now at $10, right? So you may be asking the market more than what the market can give for you. If any of this makes sense, here's your opportunity to sit down with me for what I would consider one of the very last few times that we are going to ever do this. What we are going to do is I am offering everybody a course that we put together from a not one, not two, a 3-day live seminar. It's online, this trading course. Some of you might even have it. But we're also going to do a mini 2-week retraining and self-improvement commitment mini boot camp. We're going to let everyone review this material. We're going to give you your PDF copy of how to utilize the PMC indicator. And we're going to go hardcore, roll up our sleeves. I'm going to sit with you guys on 2 Saturdays. And this will be good for me. It'll be good for you, because we're going to go through a lot of what needs to be done to get your mindset in order to prepare you for what is going to be probably the most important and most exciting quarter, not from a volatility standpoint, but a market potential correction standpoint and a trading standpoint in the marketplace. Saturday, August 25th from 9 to 11 a.m. And then we have Labor Day weekend, and then we're going to come back again, and we're going to revisit, and we're going to spend 2 more hours. There will be homework assignments. You will be required to fill things out. You will, if you want to improve, and if you want to see dynamic changes in your life, these are the steps that you are going to have to go through my little mini boot camp. It's not going to be about technical analysis. It's going to be a lot about the mindset game and what we need to improve. This can all be found right here at www.com/summer school. So this is probably one of the most important elements of putting together for a trader. Now, I'm actually giving you what I have gone through as far as preparing myself in professional fund management. And that, my friends, if I'm doing this, I think you should do this, because trading in the markets and coming into this business, and if you want a new, refreshed way of examining in the markets and examining yourself, then take this course, sign up here. It's personsplanet.com Summer School. And like I said, you won't be finding, and you've noticed over the last year or so, you're not seeing me at the Traders Expo as much. Yes, we went to June in Chicago. We gave 1 presentation. It was nice to see a lot of people, because our career has finally taken us to the path where we need to be. I'm in the right time, the right place, the right market, the right conditions for the right indicators for me to move into private money management. And that's where I'm going. But I want to share with you guys, this is what I feel is the ultimate in a summer school trading boot camp. Know the right indicators for the market. Get over and understand what you need to do to improve your mental mindset. Spend this time with me. Definitely take notes, because we're not going to be doing this very often. So I want everyone, if you're interested, take advantage of this. I think that we've definitely had a pretty good look-see as to what's out there in the marketplace, what type of trading strategies one can employ, what type of technical tools work for different market conditions, whether it's breadth in the individual indices, whether it's volatility products to help give you an added edge in where the S&Ps are going. And I guarantee it, and you know it, and I know it. People have been selling and are short the S&Ps. I don't know why or how, but man, it is a disaster for some people. They just think that the market can't go any higher. And you know, until we actually get turnaround sell signals, it's a very hard argument to sell a market that has an upside of the advanced decline that strong. One caveat: volume on both levels is diverging. So perhaps we're coming to a situation where maybe we run up a little bit. We're flat, the VXX right now. We hit a max profit kind of target, and there are some things that about this gap here I don't trust, but I would tell you, gang, if I can help you, give you better reading skills of which tools to use, when to use them, I think you're going to improve your odds, because we got an exciting 2018 ahead of us. Really, we do. And I mean that. I think that, guys, ladies and gentlemen, a couple weird things. Futures market, the bond market, right? I mean, I don't know. I don't hear as many bond bears saying, let's get really, really short the bond market like you did several years ago, right? Everyone, I think everyone got burnt out on trying to pick the top in the bond market. And why not? I mean, this is a monthly chart. If you look at the bonds, they've been stuck in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Well, actually, since about 2016, we've been stuck in about a 6-7 handle range in the market in bond futures, in the 30-year bonds. I mean, in 2010, we were down, not looking at adjusted inflation, but around a 50-point move in bonds. When it does go, it's going to be important, and we're going to be wanting to follow it. As it is right now, volume doesn't look too rosy in the market. Obviously, it's getting ready because they can't just have the market crash and burn right now. It would be a problem. But the market's definitely demonstrating weakness in bonds. What about gold? You know, some people are afraid of gold. Gold's not responding like it should, and I thought that we would see upside in gold. In the last week and a half, the dynamics changed. We fortunately put on a calendar spread in gold in GLD. So we're taking in a little theta on the front month, August 24th, and I think we tweeted that out as well. So I'll readjust that. We'll go through some of the dynamics of indicators that we want to utilize to make sure that we can give ourselves a better edge in the market. By the way, gold traditionally is in a seasonally strong period of time in August, and at the end of the month in September is like the worst time you want to own gold. If this is gold in the strongest time period of the year, I can't wait to see what it does in the weakest time period of the year with more relative weakness in its volume. So I don't know if we can say 1100 or lower, but don't forget, gold prices before quantitative easing was somewhere around the 800 level, you know, like where Amazon was a year ago. So is that likely and possible? Well, that's some of the stuff that we're going to go through and prepare people to trade moving forward. I thank you for your time. I hope you enjoyed today's session. Take advantage if you want to sit with me. This is going to be one of it, not a technical analysis session. And for the 2 weeks and 4 hours that we're spending together, I think you're going to get so much out of this from a professional trading mindset. And this is, again, the John Person Summer School of Trading. Thank you for your time. You have the link. I pushed it out there. You guys, lovely to see a lot of you at the Traders Expo. And again, until our paths cross the next time, I'll see many of you, because I know a couple of you have already signed up here. We will see you Saturday, August 25th. You're going to get access to the DVD trading course immediately, and we will send out your PDF copy on the PMC indicator tomorrow for those who attended. For those who sign up for this event, you'll get your access to the DVD because it's all online. So just wanted to make sure you're perfectly clear. The link is personsplanet.com, Summer School. Have a great evening, everyone, and thanks.